Ladies and gentlemen, please welcome your panel on The Future of Banking, moderated by CNBC International anchor Dan Murphy.
Hi everyone, warm welcome. My name is Dan Murphy, I'm from CNBC, and thank you for joining us here at this Milken event. I'm very pleased to also welcome a special panel to discuss the future of banking with you today. Sitting next to me is Elisa Farah Antonio. She's the CEO of Citi UAE. Of course, Citi is the UAE's only fully fledged brand America bank. Next to her is Sunil Kushail. He's the regional CEO of Africa and the Middle East at Standard Chartered Bank. Standard Chartered has been here in the UAE for more than 60 years. And Steve Jacobs is also joining us on the panel today. A quick switcheroo there. Steve is Latin America's, the CEO of, managing partner, I should say, of BTG. He's been investing heavily over the past 3 years, building a Brazilian digital retail banking offering. The success of that offering so far has seen BTG stock being one of the best performers on the Brazilian market over the past year, up around, I think you said more than 150%, 200%.
100%.
Over 200%. So quite an interesting move there to talk about. Steve is also a board member of EFG International, the Swiss-listed global private bank. And like Citi and like Standard Chartered, this is a firm that thrives on close personal relationships, but nevertheless, not immune to the threats of challenger digital banks. So let's start the conversation with you, please, Elisa. When you look back at the evolution of the sector so far, with everything that you know, looking ahead, what do you think the future of banking and fintech looks like, and how is it going to impact, perhaps disrupt, the institution you're running?
It's important to put things into perspective. And if we look at the banking industry, banking, the first time banking started was in like 1800 BC in Babylon. That's how old the banking system is. And over the centuries, it definitely evolved and changed. And it evolved and changed because of various disruptions. Maybe at the time we didn't call them disruptions, but there were disruptions along the way. And banking is still in existence today. We as an institutions have been doing banking for 200 years, and the way we started doing banking 200 years ago is not the way we do banking today. So it's very important to, ensure that you are continuously reading trends that are out there and figuring out how the client behavior is changing to be able to serve them. So this is not only in banking, I would say, it's also across other industries, right? If we are to look today at the use of a mobile phone when it first came, if we are to look at the hospitality business pre-Airbnb, if we are to look at logistics pre-Amazon, etc. So there's a lot of different industries that had to rejuvenate itself and rethink in terms of the ways of forward and being there for the clients. So banks are going to be here tomorrow, like they were here yesterday, but it's in which form are they going? There's always that comparison whether fintech is going to replace banks and whether banks are old and boring and losing and fintechs are, the new thing and the winners. But what is key is what exactly is fintech bringing to the equation? And myself as a consumer also and as a client, there's a lot of great things that fintech has brought to the formula, and the way forward that we, at least from an industry perspective and a Citi perspective, is how do you coexist with fintechs into bringing those solutions to better the client experience. So I know, throughout the panel we'll be discussing various other angles, but the coexistence is a key theme in terms of, the way forward for banking.
Sunil, I want to tech disrupting significant parts of the banking value chain. There was also a recent report released by Deloitte that actually suggested that digital disruption has the potential to shrink the role and relevance of today's scene so far. And do you agree that perhaps coexistence is the way forward?
I think if you look at, I don't know if the audio is good enough. So if you look at banking, I think Elisa mentioned about the past, but I think the fundamental change took place post the financial crisis of 2007, 2008, when technology and converged with innovation and disrupt parts of banking services where banks were actually, or in terms of pricing. So the first one that really got disrupted is payments. And you got the interface that customers got used to, say, operating on a big tech platform. What do I mean by that? Operating on, say, an Amazon app. It was single click, great customer experience, and very efficient in terms of customer service as well. So having got that experience fintech started emulating that onto certain niche products and services of banks and have been very, very successful. I think if you look at the future of banking, if I can pick up your first question, I think financial services will also move to demand efficiency, great customer experience, great pricing, but on a platform. So banks can no longer say, I offer you only this product and the other product I don't have. And for that gap, they'll probably have to collaborate, or for that service, they'll have to collaborate. So the fight is going to be around who becomes the epicenter in terms of interactions with the customer, and then perhaps also own the data of the customer, which would be the money of the future, or how do you monetize the data. So I think you've got to look at financial services similar to as you look at the other platforms. So you've got now mobility platforms moving into payments, into food delivery, into financial services. Similarly, banks will have to also move into a platform, offer all services, as well as
Fascinated by the story that you've been following over in Brazil as well, because as an incumbent bank, you saw what these upstart banks were doing, and you and your team said, okay, we need to respond. But first you asked yourself, how do we respond, right?
Yeah, well, we looked at it with two hats on, probably. We're an investment bank, an asset manager, and a wealth manager. We're not a retail bank. But we saw Brazilian startups like Nubank, Neon, a lot of US banks looking at Brazil as an interesting market with 200 million people, one regulator, not state by state, one language, and look at it and go, okay, this is a market we can enter into. So we knew we knew where there were threats. There were also platforms growing up. One well-known one is side of our business. So we knew we were under threat, but on the flip side, talking to players around the world, we knew that there was also an opportunity for someone like us that's not in retail banking, and building on what you said, the service level that customers have had for 30, 40, 50 years has been awful in retail banking. Why? Because many of the nations have oligopolies. You have 2, 3, 4 large dominant banks, UK, Australia, Brazil, and that's led to, and these high barriers of entry. The branch networks, the national branch networks and the big balance sheets had been these barriers of entry, and technology meant that they became millstones around their necks. So it provided an opportunity for someone like BTG Pactual that doesn't have branches to say, okay, what are these challenger banks doing around the world? Can we come in and play a different kind of how? First off, we had to do the basic of, you have senior management that's been pretty successful over the last 20 years, finding it hard to put their iPhone on in the morning. So it's like big education to start with. Real life example, we used to send our top management every year in the high potentials to Harvard Business School, tailored course. 3 years ago, we sent them to Singularity University on the NASA Research Park in California, a stone's throw from Apple. And we had Tesla, Apple, Google, the cyberpunks of the government basically scare us, but also enlighten you to the opportunity. That was critical because it got senior management all in the same boat, rowing the same way, saying, oh, and you had no not invented here syndrome. Everyone was in the same boat, basically saying, if we don't do this, they'll eat our lunch, and if we do it, we can grow and grow.
CEO of DBS in Singapore a couple of years ago, and it really struck me because the conversation that we had was based around this idea that that was a bank that basically had to disrupt itself before it got disrupted, and that was the mentality that came all the way from the top down all the way through the entire bank. So would you say that perhaps that's a mentality that all incumbent banks need to perhaps develop and enhance at this stage?
I do, and we struggled, as I'm sure the panel did, about do you use your own brand as you build your digital bank and your offering? Do you bring in people that might not have the culture and know how the wider business works? Where do you base it? Do you base it away from everyone else, or do you try and integrate it with that business? All those things, we talk to a lot of our peers around the world that maybe 1 or 2 or 3 years ahead of us in some of the more developed markets in the US and Europe. We definitely didn't get everything right, but we took a staggered approach so that we could always kind of step back, pause, maybe recalibrate.
Just quickly, I follow up on that, and then I'll expand the conversation out. But for you, Steve, when you came to this decision to develop this digital platform and this digital offering, you decided to use the bank's original name.
Yeah.
And there's pros and cons to that, but just elaborate on that thinking, that decision-making process.
It's probably a bit wider than that in terms of, we kind of circled back and said, what is our vision? And our vision was to build a full-service, well-capitalized, technology-enabled retail bank in Brazil, the best one. That meant we didn't want to be a fintech startup. To your point about disrupting, there's normally one service line. These fintechs on one area, like Revolut on FX currency and Starling on transactions in the UK. We had a vision that, okay, in 3 to 5 years, we can be the full service bank. That meant that a typical fintech would be focused on market share and growth. We had a vision of a route to profitability over 3 to 5 years. A typical fintech would have founders that may be looking for an exit in 2, 3, 4 years, whatever that timeline is. We wanted to own this business forever. A typical fintech would be uncertain of funding as it went round to round to round. We wanted to have the capital there all the time. We have our own capital. We knew we could fund this out of profits for the next 5 years. And finally, on brand, we knew that the new startups, yes, they can do a lot, especially with digital marketing now, et cetera, to build a brand, but they start from zero. That's critical in the financial services industry because you've got to build your brand. We had a brand. We had one of the premier brands in Brazil. But you also have a license, so clients, customers in Brazil knew BTG as a bank, not a tech company. And the regulator knows us as a bank. So you get approached, as I'm sure my colleagues did, in a very different way. You're already a trusted partner with a lot of the counterparties you're talking to. So you have a lot of head starts, and we wanted to use that.
Sunil, I might come over to you on this if you wanted to respond to that, but more broadly, what we see now is more widespread consumer adoption of these digital platforms. Consumers are more trusting of these platforms. For example, over in China, most Chinese turn to technology now for a financial solution rather than going to a traditional bank. So how do you compete with a challenger bank on product and on service?
Yeah, in Africa, from the scratch, but embedded within the legacy bank. And we're launching a virtual bank, which is a separate end-to-end digital-only bank in Asia, starting with Hong Kong and then moving to other parts of Asia. I think the fundamental question is, what service are you offering and with what ease and at what pricing? I think customers have become quite promiscuous in that sense. They move from one institution to the other, and we are making it easy. Technology makes it easy because you're now talking about onboarding or account opening in minutes, not days. You're talking about services being offered anytime, anywhere. And to that extent, the gating of the customer is also quite difficult. When does the customer come in and when does the customer exit? So you need to be really having a product offering which is on par. So in many markets, when we offer a product, we now want to also offer the pricing for that product which competitors give, so that you stand up and say, this is my product, this is the pricing, and this is what competition offers, which forces you to offer the best pricing. Similarly on services. I think we should be looking at digital and technology more as an enabler and a journey rather than a destination over. Because the big part, which as you realize when you start launching these digital banks, and mind you, it's not only the front-end application, it's the middleware which has to be completely digital, which is paperless, and then you create the data lake and the analytics. The most difficult part is the back-end analytics. And what do I mean by that? Anytime, anywhere customer offerings, personalized to that particular customer. And banks have not been great at it. I think when you're navigating an e-commerce site, I think they're far, far better. Banks are now catching up. And I think we should also realize that 7, 8 years ago, banks got caught out not having responded well enough to the emergence of fintechs, etc. Today, banks are also investing huge amounts of monies, and that's showing also in the market capitalization. So if you take the top 10 banks of the world, their market capitalization is 2 trillion. You take the top 10 financial services fintechs, their market capitalization is 30 billion. That's 1.5%. So there is still, quite a big gap. Not to be complacent, but at the same time, you can really start reinventing yourself. And as Steve said, the mindset and the culture is very, very important. Unless it is deeply embedded, because you're going to have a lot of skeptics who don't want to migrate from legacy from analog to digital.
Pick up on what Sunil said. There's also that time frame. How quickly can you make that transition? Because today, if we look at our customer base, you have different generations. So we're catering for the baby boomers. We're also catering for Generation Z and the millennials, right? And so today, when do you, as a traditional bank, if you want to say, we're traditional banks that are going through this journey, when do you necessarily get rid of your branch network? If we look today at the profitability of our customers, the vast majority of the profitability still comes from kind of the baby boomers and the Generation X type of clients. So there's that as to when do you do that transition? When do you really switch? I give you the example of my mother. My mother, though she uses now the app, she's on Facebook, she's on Insta, but she still wants to go to the bank. She wants to go to the branch. I mean, now more than ever, because she's in Beirut and she's going to queue up to get her dollars in cash, but 25 and 22 who don't understand why there is a need for a branch network. I give you an example. Day before yesterday, my son moved to work in Dubai. I get a call, Amazon delivery. He's actually ordered hummus cans. I flipped. I said, what are you doing? He says, why even go to the store? So you really, it's totally different generations, and you need to figure out as to when do you make that transition. Clearly, there's a time lag. And if we look at innovation, back in 1977, ATM machine, which Citi had commercialized, everyone was saying at the time, okay, you withdraw money, tomorrow you deposit money, next you do your checks, etc. Then branches will, become obsolete. Here we are in 2020, branches are still there. What I'm trying to say is it does take time for behaviors to change and for innovation to be kind of accepted wider. If you look at the branch networks from a global perspective, I think Europe has been much quicker in terms of reducing its networks, but in places like UK, Japan, and the US, we've only started seeing that needle moving. So, just to keep that in mind in terms of how do we really transition into the bank fully digitized as well.
So let's talk about that, and that's a great point because I guess from my own experience as a millennial, I have completely different expectations on my bank than, let's say, my parents' generation or their parents. Steve, what does the next wave of that engagement look like in your opinion?
Well, the next wave, let me answer it in a slightly different way. First off, on our side, we need to combine the beauty that fintechs bring is fast action, technological knowledge, innovation, disruption, client centricity is in their DNA. We have to learn it and apply it to bring this next generation and the next generation. So working together with the people that work on our digital banks, a much younger crowd, think totally differently. And that's absolutely essential. And you're seeing the next wave now. Like Brazil has one of the highest take-ups in the world of mobile phone usage because the landline was pretty crap and everything else. And that's a lot of people. The whole using your phone to do absolutely everything, with the coming of 5G, and I went to the venture capital session before this, aspects will probably be 18 months, not 5 years away. That takes this to a next level of what you can do over the phone banking. And I actually think you'll see all the branches will be Starbucks soon. You won't need it. The next generation doesn't even dream of going into a bank branch. They wouldn't know what a meeting with a bank manager is, et cetera. They have no need to. And they will shop around. So you've got to, we are a full service bank, and we're trying to make sure that you kind of capture that client, that customer, whether it's a millennial or a matriarch of a family, with a lot of high quality services, a lot of touch points, the UX, the UI. And if you fail at one, you know that someone else has a great offering in that one little piece, and you risk your client jumping, leaving, and then maybe being cross-sold. I use Starling in the UK because which is a challenger bank, it's a great app. I use it for transaction payments, and I still use my bank from 25 years ago for everything else. But now they're offering this and that, and I move a little bit more and a little bit more. So I think you just have to make sure you always have that client in mind, and
We're on now. Sunil, from your perspective, millennial to matriarch, what does the future of engagement with the bank of the future look like?
Listen, I think banks have to have a sense of paranoia because we have time. I agree with Alyssa that we have some time. But do remember that we are hanging our hat on regulations, protecting banks, trust, and fintechs not really making that much money. However, if the big techs, and what do I mean by that? I'm talking about the Googles and the Amazons and the Ubers, they get into financial services in a significant way and allow themselves to be regulated, i.e. become deposit takers, then they have the customer base. They're not a fintech trying to get a customer by losing money. And they also have the trust of the brand. That's a very potent combination. That's a very, very potent combination. So I think you need to be very, very careful about the big tech coming in and a sense of paranoia in a positive way, which means you need to keep comparing yourself to that particular platform and how do you have your product offering which is on par with that product, with that platform, so that the differentiation is minimal. As I said, everybody wants to be at the epicenter in terms of your lifestyle. So a lot of the battle today going on is, if I am on a particular application, I should be able to offer all my services without having to exit that and move on to a different application and then come back to the one I was on. So the battle is for that, for the eyeballs, the attention, and then not moving and not kind of toggling between different applications. So banks will have to be offering, sometimes directly, sometimes as a node or a conduit, the different services, lifestyle services. So I think big tech is something I would be worried about because millennials are very comfortable dealing with big tech. And tomorrow if they have to start offering, it's going to be a big challenge.
I 100% agree, and I think they will do it. When we're in the Singularity in California, we spoke to Apple executives, and they are very worried about the regulation side. And you understand, how much pressure that Facebook, et cetera, is on as a non-regulated market from a lot of what they do around privacy, et cetera. Going into a regulated global banking market is not an easy step. I think they will take it. You look at Ant Financial and you look at the power. And to be honest, I think the banks have shown, the incumbent banks and the banks that are acting have shown that when you get the small fintech, not small, but narrow fintech startups that broaden, we have a lot of resources we can throw at things to move, address, and even get ahead. The big tech guys, it's a different story.
Yeah. Elisa, what's your take on this? Because I guess scale is the other thing, right? Let's say Libra really takes off, for example, from this Facebook project that's been in development for a number of years now. Libra takes off. What does it mean for a bank like Citi? How do you respond?
We have So we have certain views when it comes to kind of cryptocurrencies and bitcoins. And as a regulated institution, you have to, abide by anti-money laundering standards. So, when it comes to these new currencies, let's say, or modes of, payments, as an institution that is regulated, there's a concern in terms of, the source, where's that coming from, etc. So, we're kind of taking a sideline there. But when it comes to, alliances with fintech companies or big technology companies. We've just, partnered up with Google accounts, and we see that as a positive way in accessing a certain pool that we don't necessarily have, and that is a way of thinking out of the box on how do you bring in these partnership where you're not necessarily scared from from working with a big tech company or what have you, but you actually find where you can work together and extract certain the opportunity for you and render that service.
Steve, fear big tech? Fear big tech?
Fear big tech, more because of exactly what we said, the resources they can bring in the existing customer base and the familiarity and trust the clients have of that customer base. It's the flip side of what I said earlier about in Brazil, we're a very well-known brand. People know us as a bank. So when we launch a digital retail offering, like, okay, that makes sense. People that have on Facebook and they get offered a financial product, it makes sense to them. So there's a fear on that. I think I'd also pick up on the point about cryptocurrency. Cryptocurrencies are going to come. I mean, they reduce the costs of transactions, etc. I mean, it's just when and how. And absolutely, AML, KYC, all the, where's the money from? Is it funding terrorism or not? That has to be sorted out. I think there's a fourth or fifth directive coming in Europe soon, and a lot of the crypto to evolve. Regulation will have to come, whether it's in 1 year, 2 years, 5 years. And the fear there is obviously more because I think the AML KYC will just get sorted. It's in the crypto industry's interest to get that sorted. The regulatory side is much more control of your own monetary policy. And how can you pull the levers that you've always pulled in the past and not lose control? But it will happen, and I think there is a massive opportunity for us all. I mean, you'll have some parts of our businesses that will die, or you lose margins, etc., and other parts that will grow enormously. We did the first tokenization in Latin America last year with a real estate underpinning it, and the amount of interest and press and knock-on effects, it had tiny little offering. I think globally it was the first issuance of its kind. The appetite is just growing. So I think that's a hugely interesting space. I don't know it brilliantly, but it's a hugely interesting space.
If I can, before, perhaps we also can open it up to questions. If you have any questions, please feel free to raise your hand and we can get a question in. But I just wanted to go quickly back to this issue of regulation. I think the UAE is an exception. There's a great culture here for fostering new products, innovation. There's new businesses entering the market. But in the other markets that you operate in, Sunil, do you feel that perhaps regulating the development of products that could potentially challenge you in the future? Is this something that you look at?
I think it varies. We operate in over 60 countries. In my own patch, we've got over 25 countries, and we've launched a digital bank, as I said, in 9. We're in the process of expanding that to 2 more countries. And these are large countries, large populations. They range from 5 million to 200 million. And the ecosystem to support a digital end-to-end offering is very, very different. And you have different agencies that look after different facets and aspects of the ecosystem. What do I mean by that? For digital onboarding, a national identity card is very important if you want to have a seamless, paperless digital onboarding. In many countries, the financial services regulator has no say in the national identity and the amount of, and the data sets that go into it, and what sort of approvals can they give. That sits with the Ministry of Interior. And they have limited interest in promoting financial innovation. They're more concerned about security, etc. So I think there is convergence taking place, but it's very, very difficult. It's not that easy. That path is difficult, and it varies from market to market. The other issue is, and then this adds on to the complexity. If you don't have, in some sophisticated markets, you put the data in there, you take a photograph of yourself, you get a virtual card coming from our side with the account number on your mobile phone, and you can use it almost on the go within minutes. In many markets, because this is not permitted, you have to go and physically verify, face-to-face verification, signatures, different proofs you got to take. So it varies. I also wanted to touch upon the cryptocurrency. I think the underlying technology, blockchain, has got multiple uses and is already getting into mainstream now, because it takes away a big part of the cost, which is verification. Because you have multiple democratic, consensual kind of, or consensus-based verification taking place. But a cross-currency cryptocurrency, I think regulation is going to be quite wary of it till it kind of settles at a point where they get comfortable. I think it's going to be more national cryptocurrencies where the regulator has oversight, because it's a store of value, it is a supply of money, and then maybe move into cross-currency, cross-border remittances. But cryptocurrency by itself, and that's why you face a lot of challenges and a lot of opposition to that particular.
Clearly, one of the key things is for regulations to adapt much quicker, and we see the pace to be much slower than where the technological development is. And so that's where, if you are a regulated institution, you are at a disadvantage, whilst you have the interest to innovate and bring in the right solutions. The fact that the regulation doesn't necessarily translate into the tools that are available kind of puts you a bit at a disadvantage. Now, from a regulatory perspective, and we've seen that globally, and even here in the UAE, there is a focus on RegTech, and there's a lot of work around that. But the big question is, how quickly can that move forward? And the need for it to move forward, not to prohibit advancement into finding the right solutions and platforms.
And it really depends on the key countries adopting this regulation, because you've got small countries or countries that are trying to be cryptocurrency, blockchain friendly, cryptocurrency friendly. They have regulations or putting regulations in place, but they're very small markets and they're not really integrated into it needs the US. Once they move, everyone else is going to follow, because it's the largest market in the world.
Let's open it up to questions now. Does anyone in the room have a question? You, sir, at the front. Maybe we can try and get a microphone over to you if we can, or if not, use your loudest voice possible. Please go ahead.
I think cybersecurity risk goes up multifold because the surface area that you provide for threats to come into the system becomes much wider. You're allowing customers to come in through multiple nodes, and to that extent, and there is, as I said, depending on the country, there is no face-to-face verification. They can come through online, they can come through mobile, they can come through various channels. So that's an area where banks are investing huge amounts of money, and I think that trend will continue for years to come. On your second question around policies, I think it's a very good question. It's a big challenge, particularly when you are lending money. You've got these credit policies which have evolved over the years with ifs and buts and maybes, and then end-to-end seamless digital decisioning that takes place by pulling data from, say, the bureau, by pulling data from the application, and then by pulling data from maybe other data sets. That becomes quite difficult. So you've got to make it actually quite simple in terms of your credit decisioning. You've got to, in our view, discard the previous policies and have a digital offering which has a pretty simple algorithm in terms of in-principle approval, and use sandboxes in terms of limited kind of exposure to understand and get the right experience and then expand that portfolio. Otherwise, it's very, very difficult trying to put the old legacy credit policies onto a digital platform.
Yeah. Can I comment on cybersecurity? I mean, cybersecurity is, as a matter of also national interest. It's not only, doesn't only pertain to banking, but across various industries. And I mean, from a banking perspective, the investment that goes into cybersecurity and ensuring that our systems are protected. And with that, the big topic in terms of data privacy. And that is something that is on regulators' mind. That is something on national security level as well, in terms of who has access to the data and how do you protect your data. And these are two very important aspects that one needs to keep the focus on. And therefore, there's so many regulations that came across to protecting that data. And one of the things that we continue to advocate for is to ensuring that where are you storing the data, these data centers, are there in certain jurisdictions where there's a certain protocol of accessing the data, etc. So, two very important aspects.
I think there's an ecosystem growing up of cybersecurity firms that deal with banks. So from our perspective, and again, be interested in the panel, but from our perspective, Latin American focus, we outsourced to a global provider that had been doing this for 5 or 10 years, and HSBC got hacked and client data was out there. I mean, that was not almost terminal. They're a massive bank and everything, but that was a huge, huge issue. And the fear of a bank is exactly that. Customer data, customer deposits moving, things happening and between accounts that you don't know. So going out and just almost outsourcing that part was looking at 2 or 3. You could draw, very hard to distinguish between 3. So the whole sub-industry's evolving and developing. Although going again to California, to the Singularity University, they do scare you with what's coming on quantum computing, et cetera, that changes the paradigm again. But apparently, I hopefully be retired by that time.
Does anyone else in the room have a question? Yes, sir, over here.
I can't hear you very clearly, sorry.
Yeah. I wanted to pick up the point around the culture that you mentioned, that we need to be paranoid about the big tech coming in, and how do we create that culture within the bank? So how do you create that cultural shift, right? A bank that's used to risk, let's not lose a single dollar, and how do you motivate X 100,000 employees to now be paranoid and be agile and move fast? And if you could give us some lessons to say how you have been able to make that shift within your own banks.
Thank you. I'll share our experiences. I can't give lessons, but I'll share our experience. So the first step was pretty similar. We took our top 50, 70 people to Singularity as well. So that's but I think communication becomes very important. You need to continuously communicate, and the leader has to be the one who has to be visible with that message. It cannot be given down to the head of technology to be leading the change of digitization. You cannot bring in a new person as head of technology and expect that person to change the old culture when the boss and the head of risk have a different mindset. So it has to be led by the senior management, and then you got to start showing proof points in terms of the improvement and where you lost market share because you didn't move fast enough. So it has to be led from the top. The other thing which we are doing, obviously, is we are moving, quite rapidly in terms of getting more engineers and more tech-savvy people into banking, not to run technology, but to run businesses. So when they come in, they start looking at things from first principle. How do we make this process simpler? These are engineers, technology specialists. And how can we then put technology at the back of it to really fulfill that service? But it has to come from the top. It has to come from the top. So in our case, we run it at the senior most level on a weekly basis. You may not believe it, but it's on a weekly basis. And that requires a lot of tenacity, it requires a lot of time commitment, etc. But then the message you see in a matter of 12, 15 months, everybody talking about digital, everybody talking about this is the way we move, and then they embrace it. And of course, training.
Can I add, oh, please. I was just going to add to I think the culture evolves very quickly as well, because you have exactly that, the top-down buy-in, and then we do the same. Our weekly operating committee, management committee meetings now, probably 60, 75% talking about our digital initiative. One, it's more interesting, and two, the wider bank kind of functions as business as usual. But now, like 3.5, 4 years in, when we're taking top talent out of the universities in Latin America, 80, 85% of the applicants want to move into that side of the business. And so the culture's getting generated, and it's evolving all the time. And the hardest thing is to make sure you don't blend culture with this more of entrepreneurial, tech-enabled spirit.
Yeah, I mean, if you want to be a player at this day and age, you cannot adopt a status quo policy. If you adopt a status quo policy, you are either now on life support or you're kind of almost dead, right? So, for kind of any of us to be having this discussion, it means our institutions have actually taken the right steps into becoming much more agile to all the disruptions that are taking place. And clearly the culture, as Sunil and Steve said, tone gets set from the top. I can share with you some of the things that we have done at Citi. We started by saying 10 years ago, okay, if we want to be serious players and understand our clients' behavior and trends, we need to do certain investments. But we also realized that we're not a tech company. We don't necessarily have the know-how. We, could describe ourselves then as boring bankers, and therefore the need to go out recruiting bankers. We went out recruiting engineers. We went out recruiting tech savvy individuals. Today we recruit people from the big tech companies as well, and bringing in this talent also changes the culture with setting the tone right from the top. The other thing is, we're doing business in a certain ecosystem where you want to service your clients. And today, fintech companies are our clients. Digital natives are a target market that is of extreme interest to banking. They still require banking services. So we need to understand what are their needs? What exactly are they disrupting? How can we be of service? But at the same time, how can we also be invested? So, creating our own innovation labs, doing our co-investments through an entity called Citi Ventures, and servicing these fintech or disruptors out there as our clients. So,
I think the parallels are stark, because you do it on a much bigger scale. But in Brazil, we set up something called Boost Lab. We actually looked at what you were doing. We looked at what Barclays were doing, et cetera, and didn't want to reinvent the wheel. We get more press, more attention from the 28 startups we've boosted than probably anything else we do. We're viewed as entrepreneurial. It builds this ecosystem. Go along. We actually acquired a digital marketing company that we use also for third parties. So we've created a culture where we're embedded in the ecosystem. So it's not. So it's normal for us. It becomes a normal part of our.
And maybe one more thing to add is we created internal challenges. So we created something called D10X, where we've actually encouraged our teams across the 99 countries we're in to kind of create their own groups and come up with certain solutions where they thought it could either bring in a new product or better the client experience, etc. So when you create that kind of competitive also environment within, and ensure that you embed in the culture for your employees to be curious why, how did that happen, then you can really drive change and further solutions.
So the key learning there, build it in, don't try and bolt it on, I guess. Any other questions from the audience? Yes, sir, at the front.
Policies. It seems the same is happening with banking, meaning in the old days, certain banks had certain attractiveness, which is basically, I have an account with X bank in 5 countries. so I can do my business, even my personal business, easier in those 5 countries, right? It seems that is not the case levied elsewhere. They're saying, do you know what? We don't care anymore about these regions. We'll just have a certain representation. And that seems, at least from the outside, hugely affecting their retail or even corporate business to the advantage of the local presences. I mean, even yourself, sir, you said, we created 9 digital banks. Why not?
And even for capital, we would love to operate as branches across the world, but you know, the trend is moving more and more towards subsidiaries, so you know, to ring fence. And that's been an outcome of the great financial crisis. There is a problem, you will be protected by this particular mechanism, and the mechanisms differ from bank to bank. I think regulation is settling in that regard. It is settling in that regard. And you're probably seeing banks now wanting to expand rather than contract. I can give you our own example. We are expanding into Saudi. We're looking at a couple of other markets in the region. That was a question mark earlier because the trend was more towards pullback and you know, just focus on a few markets. So I think it's a mix. Some are for regulatory reasons, some for business reasons. So I think regulation, we believe, is settling down in that regard.
Maybe I can add to what Sunil has said. You know, the big shift from when the financial crisis happened, let's talk about 08, 09, and the way most of the banks had to reinvest and relook in terms of their kind of own books, figure out how to bring their organizations back to soundness and safety. And so there was, you know, massive de-risking exercises across. There was also massive investments that had to go into kind of compliance and compliance AML frameworks, etc. And that required maybe banks to kind of take a step back to make sure that we are healthy again before we embark, you know, into the markets again. Now, in parallel, and because we're talking about technology, during that period, what happened is a lot of the fintech companies picked up, and they were much quicker than traditional banks were. But as far as, let's say, if we talk about the GCC markets and the great regional banks that exist today in the market, organizations like Citi and I'm sure like Standard Chartered, you know, think how do we add value when we do businesses in these markets, rather than how do we overshadow or duplicate what regional and local banks are doing. So how do we really ensure that we are complementing each other? So maybe that's where your comment comes from. Potentially you could have seen some changes in what certain banks are doing in the markets.
We've only got a few minutes left, so I just wanted to finish off with a question from my perspective, which helps us all to look forward. I wanted to ask you individually, what are you doing within your organization? What would you say is the biggest challenge that this sector is going to face in that time? Sunil, would you like to start?
Listen, we are assuming that regulation will allow big tech to come in, and open banking is going to be the norm of the future. What is open banking? Open banking is all the data that sits with the banking system will be accessible by third-party players, of course, with the consent of the customer. So you really need to go with that mindset, that it is going to be a kind of a level playing field in that sense. And how do you then compete in that sort of an environment? That becomes quite important. Secondly, doing a clear and honest gap analysis of where you are today versus the best. So as I said, data analytics, for instance, that is an area which banks are catching up on. Not as good as, say, some of the big tech players. And then collaborations, because, listen, as a bank doesn't want to get into the food delivery business or be the one actually delivering the parcel at the doorstep, there are a lot of others who don't want management, compliance, regulatory oversight. So how do you complement? And I think the big challenge is going to be how do you find the right alliance partner with the right mindset, which can scale up and hopefully have it at a global level. Difficult to have it at a global level because there are few only, and everybody will be vying for that association. So I think that's a mix of areas that we're looking at.
Steve?
From my perspective, I think over the next 5 years, we have a massive opportunity, and we picked Brazil as our home market because it's big, to roll out what we're doing across Latin America. So we're very excited about that opportunity. It has regulatory implications, et cetera, but there's big markets or established markets. You've got Chile, you've got Mexico. Let's see what happens with Argentina. Maybe not quite yet. But we're on the ground. We're known. People know us as a bank. They know what we're doing in Brazil. Huge opportunity. Back to the blockchain, cryptocurrency, we're trying to stay as knowledgeable and in the region. Mentioned the tokenization we're doing. We're working on several other things at the moment. But with that comes your question around what worries you, and we've just got to make sure that we do things gradually. I think the reason we've gone from 6 billion market cap to 16 billion market cap in 2 years is because we had this milestone approach, which sounds like we all had. You do something, you make it work, you do something, you make it work, and then you gradually roll out your vision. We've got to make sure we don't trip over ourselves, et cetera. And then it's back to what we said before. It scares me is the big tech companies and how they come in.
Alyssa, you get the last word.
Yeah, maybe I'll just say, the bank of the future is the bank is going to, let's say the winning bank of the future is going to be the bank that is able to deliver the best life experience for clients, be it corporate or be focus on delivering that best life experience. This is what keeps us, I would say, awake, and that really needs a shift into the culture. So ensuring that we are curious enough, ensuring that we are humble enough to listen to what the clients are saying, and humble enough not to, let's say, disregard disruptions that are out there, because sometimes one can get into a certain sense of arrogance in terms of this can't disrupt me, and you kind of play a certain trend down. So we've learned from the past, I would say. So making sure that you're humble enough, you're listening to what's happening, and you are able to deliver the best life experience. If we do that, then we'll be the best bank for the future.
Because at the end of the day, it's all about the customer, right?
Absolutely.
Okay, we'll leave it there. Elissa, Steve, Sunil, thank you so much for your contributions today. Ladies and gentlemen, for the rest of the conference.
Thank you.